Are rising interest rates putting your home buying dreams on pause? In upstate South Carolina, mortgage rates have jumped to around 6.9 this year, a far cry from the 3% loan buyers enjoyed just a few years ago. Higher rates mean higher monthly payments, shrinking what many buyers can afford. But does that mean you should wait it out? In this video, I will break down how today's interest rates are really impacting upstate South Carolina home buyers and what smart buyers are doing about it. I'm Elizabeth McCarthy. I'm brokered by eXp Realty. Let's break this down and figure out how you can be a smart buyer. After years of record low interest rates, buyers in 2025 have had to adjust to a 30-year rates in about 6 to 7% range. That jump significantly increases monthly payments. For example, a $300,000 mortgage at 7% costs almost $700 more per month than at 3%. Higher rates directly hit affordability, meaning some buyers can no longer qualify for the same price range as before. It's a tough pill to swallow, but experts predict rates will stay in this high 6% range through much and the remainder of 2025. In other words, this is the new normal we have to work with in the current market. With higher borrowing costs, many would-be buyers have pressed pause on their searches, especially first-time home buyers. Fewer buyers in the market means the market pool is smaller than a couple of years ago. And however, the buyers who are out shopping now tend to be more serious and motivated. The buyers now have accepted these higher rates as their new reality and are moving forward anyway. In upstate South Carolina, we're seeing some buyers adjust to their target price downward or explore different neighborhoods in their budget. Others are finding creative solutions, larger down payments, rate buy downs, or opting for adjustable rate mortgages to mitigate the initial cost. What is the upside of higher rates? Less frenzy and competition, with 44% more homes on the market now than last year. You're less likely to encounter bidding wars, and sellers may be more willing to negotiate or offer closing cost help. In short, higher rates have thinned out the casual shoppers, giving serious buyers a bit more breathing room to shop. Despite interest rates, upstate South Carolina's housing demand remains surprisingly resilient. Our region's strong job growth and influx of new residents mean there are plenty of buyers eyeing homes here. Many new consumers are coming from higher priced markets. They might be or have sold a home in New York, California, or have cash or a larger equity, making them less rate sensitive. In the luxury segment, for instance, relocations from Atlanta, Charlotte, and the Northeast are driving interest rates in high-end properties despite the rate changes. For the average buyer, though, these rates do encourage a more cautious approach. Homes are no longer selling in a weekend like in 2021, and buyers have the luxury of time to decide. We're looking at anywhere from 50 days on the market to almost 90 days on market between Spartanburg and Greenville. This more balanced market means buyers can think before they take that leap. It's a welcome change from that recent frenzy. It's tempting to sit on those sidelines, hoping rates will drop significantly. And yes, some forecasts say mortgage rates could ease into that lower 6%, maybe even higher 5% range by late 2025. especially if the economy cools. But Federal Reserve Chair Jerome Powell warns that rate forecasts are highly uncertain, and so trying to perfectly time the market is pretty risky. In fact, many experts are now suggesting this newer philosophy: marry the house, date the rate. And this means if you find a home you love, you can afford it now, and don't let a moderately higher interest rate stop you. You can always refinance later, especially if the rates fall, but you can't rewind and snatch the perfect home that you missed out on. Plus, the moment rates dip below the 6%, a flood of serious buyers will rush back in. Pent-up demand could quickly heat up competition and drive home prices even up further, offsetting the benefit of a lower rate. In other words, waiting for that lower 1% lower on the rate might mean paying more for the house itself. If you're financially ready, it often makes sense to move ahead rather than chase on an unpredictable future rate. If you decide to buy now, focus on what you can control. Shop around with lenders. Even in the high rate climate, there's variance between banks, and quarter point off can save some money. Ask about buy downs or seller concessions. In today's market, some sellers will contribute to closing costs or rate buy downs to secure a buyer. Adjust your price point so your monthly payment is comfortable at today's rates. It's better to buy a slightly less expensive home that you can afford than stretch it too far. And of course, pre-approval before house hunting with the rates changed is what you need to know to get your budget. Finally, keep perspective. Owning a home is a long-term investment. Rates will ebb and flow over the years, and that first rate isn't forever. What matters is finding that home that fits your needs. The Upstate is still a fantastic place to put down those roots, and with the right strategy, you can make your move with confidence. Don't let those interest rates scare you away from that dream house. If you found this helpful and insightful, please download that free Upstate South Carolina home buyer guide. It's in the link in the description below. And if you're ready to start your home search or you have questions, let's hop on a call and book a free consultation. I'm here to help you make those savvy moves in any market. And please don't forget, remember to hit that subscribe button for more local real estate updates and tips. Thank you for watching. I'll see you on the next video.